We are getting ready for the final trading session of the month, and joining us right now is Sylvia Jablonski. She is the CEO and Chief Investment Officer of Defiance ETFs. Good morning to you. Let's start with both the target earnings and maybe some of the comments that we heard from David Solomon about his expectation for the economy going forward. But I'm curious what your reaction to those numbers were and what they meant in terms of the consumer right now.
Yeah, I think we're in an interesting spot in the market right now. So the consumer remains somewhat stronger, at least in a stable position. But we have a Fed that we know is looking to really deaccelerate the economy and perhaps, bringing forth the fears of recession and slowdown and things like that. So I think it's going to affect the market in the short term in terms of, a lot of volatility and worries about us crossing back under those 50-day, 200-day moving averages. But, what I do take from this, though, is that in the meantime, the consumer has been spending. The consumer still has a good amount of cash in savings accounts. It's not at the all-time high levels. And so there is potential that we do avoid a massive recession and that we kind of have, that softer landing version of this scenario.
In a softer landing scenario, what do you want to own? And in a harder landing scenario, what do you want to own?
Yeah, so in a softer landing scenario, I'm looking through, right? I think that this year is going to be tough. I think that, as I said, the Fed is on his mission. I think in a softer landing scenario, I'm big on AI. So I'm going to look at all of the AI machine learning stocks, all of the names that are going to change the way we sort of live, convert e-commerce, change healthcare, change cybersecurity, driverless cars, all of these things that are growing. And if you just look at the user base of ChatGPT in its first couple of months out, over 100 million users, CAGR is expected to be 37% by 2026. That's not so far off, so I'm looking through. If we get the hard landing, I'll probably stick to more defensive names, look at some healthcare types of names, and also look at some of the fixed income products. You have a lot of cash-like equivalents that are paying 4 or 5% right now, and I think that a lot of investors, particularly those closer to retirement, will probably play in that arena.
Right. What are the tech names that you like if AI is your place? And the other thing is, how much do you fear that because all we're doing is talking about AI right now, that maybe it's overbought, even in this environment?
Yeah, I think it's just there's a lot of hype around it, right? So when Microsoft came out and announced their investment in OpenAI and ChatGPT, I think a lot of people sort of perked up and paid attention, and so it got a lot of hype like everything else. But there's a huge difference, I think, between AI and something like, let's say, the metaverse, which could be a decade off. We're talking about this is going to come to fruition in months. So companies that benefit. Microsoft is going to be a leader there. I like IBM in this space. Google, even with the Bard, sort of mix up, I think they're going to power ahead to now really win that race. And NVIDIA, the staple of AI.
Sylvia, we want to thank you for joining us. Appreciate it very, very much.
Thank you.